Welcome to today's market report.
Germany stocks were mixed after the close on Monday, as gains in retail, transportation and logistics and telecom sectors led shares higher, while losses in chemicals, technology and utility sectors led shares lower. The DAX fell 0.1%, while the MDAX index added 0.7%, and the Tech DAX index climbed 0.12%. The best performers of the session on the DAX were Continental AG, which rose 2.19% to trade at 131.6 at the close. MTU Aero Engines NA added 1.45% to 210.60. The DAX Volatility Index, which measures the implied volatility of DAX options, was up 3.39% to 18.93. CAC 40 rose 0.43% to hit a new 5-year high, while the SBF 120 index climbed 0.45%. The best performers of the session on the CAC 40 were WFD, Unibail, Rodamco, which rose 2.6% to trade at 73.77 at the close. US stocks are seeing opening mixed on Monday, trading in narrow ranges just below record levels, with investors digesting Friday's payrolls ahead of a key inflation report later this week. The Dow Jones futures contract was up 30 points, while S&P 500 futures traded 3 points lower, and the Nasdaq 100 futures dropped 35 points. Crude oil prices weakened on Monday, slipping from fresh multi-year highs as traders banked profits ahead of the restart of talks between Iran and world powers later in the week over a nuclear deal. US crude was down 0.4% at $69.36 per barrel, after earlier touching $70 per barrel for the first time since October 2018. Brent was down 0.5% at $71.56 per barrel, after earlier hitting $72.26 per barrel, the highest since May 2019. Gold futures fell 0.2% to $1,888.35 per ounce. On the FX front, the GBP/USD pair managed to rebound around 60 to 65 pips from early European session lows and refreshed daily tops around 140-170 to 75 region in the last hour. The British pound kicked off the new week on the back foot and was weighed down by a combination of factors. Doubts over the UK government's plan to reopen the economy on June the 21st, in light of the spread of the so-called Delta variant, turned out to be one of the key factors that undermined the sterling through the first half of the trading action. Apart from this, indications that Britain's relationship with the European Union has been soaring exerted some additional downward pressure on the GBP/USD pair. Ahead of Brexit talks on the Northern Ireland protocol later this week, the EU's ambassador to the UK said on Sunday that the level of trust between the two powers was low. This, along with the modest US dollar uptick, contributed to the GBP/USD pair's early decline. As investors looked past Friday's mixed US monthly jobs report, the greenback found some support from the US Treasury Secretary Janet Yellen's comments over the weekend, saying that higher interest rates would be a plus for the Fed. It is worth recalling that softer headline NFP print had tempered market expectations that the Fed would begin tapering its asset purchases sooner rather than later. Yellen's remarks, however, reignited taper talks amid worries about rising inflationary pressures, which in turn acted as a tailwind for the US bond yields. Despite the negative factors, the GBP/USD pair once again showed some resilience near the 141 round figure mark and attracted some dip buying on Monday. The subsequent positive move supports prospects for additional gains, though it will be prudent to wait for a sustained strength beyond 142 mark before placing fresh bullish bets. There isn't any major market-moving economic data due for release on Monday, either from the UK or the US, hence the US bond yields will continue to play a key role in influencing the US dollar price dynamics. Traders might further take cues from the incoming Brexit-related headlines in order to grab some short-term opportunities. Euro-dollar traded during most of the day in a small range and broke to the upside during the American session and climbed toward 122. The dollar index was up less than 0.1% at 90.18, remaining in the narrow range it has kept for several weeks. Meanwhile, dollar yen was at 109.5.
This is today's market news. Thanks for listening. We'll see you next time.